Hello, everybody. Welcome to Wednesday. The S&P 500 was up a grand total of 0.02%. I'm calling this the wild ride to nowhere today because we were up and then down and up and down. It was kind of wild and ended up at exactly the same place after all that. We saw oil prices going up today, so there's some concern. With bond market was falling, yields were coming up, probably based on oil price movement. The potential government shutdown is out there. And we're seeing, situations where the Federal Reserve chairmen are talking aggressively about keeping rates higher for longer, which is affecting the bond market also. So when the bond market falls, the yields get higher, it makes it more competitive. Got up to 4.6% today on the 10-year yield, for example, which is a 15-year high. And so people might be buying more bonds in an attempt to, get those higher rates and not buying stocks, although stocks do average a lot more than 4.6% on over the long term. Still, people do like that. So, kind of seeing this interesting play that's happening right now, I think all of this is really, in my opinion, just part of being in no man's land here. Between 4,200 and 4,300 on the S&P 500, we shot up through that very quickly earlier this year. And so we didn't spend any time there, didn't create any support. We broke through the 4,300 support yesterday. I think we go down kind of in that 4,200 to 4,100 range. We spent a lot of time there throughout the last 12 months, for example. So there should be some great support there. And I don't think we're going to stop before we get there, would be my guess. That's just, historically kind of how it's played out. But what is happening is we're seeing a lot of short interest on the market, which just means that people believe it's going to go down. And once it maybe gets to that level of support to 4,100 to 4,200, maybe some buying comes in. And then once the short interest starts seeing buying, they usually bail out. And because if you're shorting a stock, you can lose an unlimited amount of money. And so the way that you get out of that short is cover your short by buying the stock back. Well, if all the short interest starts buying their stocks back, of course, that's going to drive the market up more, starts to look like a rally, people start jumping in. And that's how a lot of these, play out as far as that goes. Alternatively, we could break through that kind of 4,100 level and you would have to deal with, a potential reestablished downturn and such too. So we'll see how that plays out. But there is a lot of support there, and I think we'll probably get there sooner than later as far as that goes. And we'll have to see how the government shutdown, impacts what's happening as far as that goes, along with the auto union strike, which is, potentially inflationary. So, there's lots of little components coming into play here, but don't be surprised to see the market, have a rally here someplace. Last year, we hit a low October 13th. Nobody felt that I was reading that was the bottom. It was going to go lower and lower, and we rallied all the way up until the end of July this year. So, this time of the year is when we had our issues last year. So it seems similar to what was happening then. So hopefully we get some bottoming point here and get a rally going as far as that goes. But we'll wait and see how it goes and look forward to seeing you tomorrow, and we'll talk about what happened then. Thank you.